Hey there, Tiffany Thomas with WealthyTiffany.com, and in today's video, I'm going to talk to you about what I would do if I had a lump sum of money to invest. If I would go with a financial advisor or DIY it and do it on my own. And before we dive in, if you are ready for financial freedom, comment freedom below in the comments. And if you're serious about fast-tracking your financial freedom, click the link below this video in the description and I can help you do that. All right, you guys, let's talk about what I would do if I had a lump sum of money to invest right now. Would I use a financial advisor or would I do it on my own? Would I DIY it? And the reason this is coming up is because I had a comment on one of my videos and he was just new to investing and wanted advice on what he should do, if he should try to figure it out on his own or if he should just go to a financial advisor. And this is a really common question. I was even talking to a friend a little while ago at church, and he was saying, you know, he has quite a bit of money and he doesn't really know what to do with it, like how to invest it. So I wanted to share my opinion on this, and you guys, if you already have an opinion on this, comment below and share what you think you would do, or maybe you have done already if you just had that lump sum of money ready to invest. And here's what I would do and why. So I would do it myself. If you have any sort of interest at all in learning to invest your own money, it doesn't have to be like you want to sit and spend hours and hours going over all of these investment details and things, but just a little bit of interest in controlling your money and putting it where you think it would be best. Because in all honesty, you're the one that's going to care the most about your money, not anyone else, not a financial planner, not a friend, not a relative that you might be getting advice from, but you're the one that's going to care the most. And so I would actually say, try to do it yourself. And that's what I've done, and I've seen success in doing that. And, you know, I've had really good returns on my money that I've invested. And I used to work with a financial advisor. He was actually the 401k plan advisor for my previous employment. And so I had worked with him. And then as I started doing more research, I was figuring out that he was not giving me the best advice, and that I was actually paying more in fees than I really needed to be. So I switched and I started doing it on my own, and I feel like that's been one of the best decisions that I could have made for myself. That being said, I get that some people don't have any interest in trying to do it themselves. So if they are going to go with a financial advisor, I would recommend doing a fee-only advisor. A lot of them charge a percentage of the money that you're investing. And I don't really like that, because as you invest more and more money and that builds up, their payment builds up. So that's actually taking away from the money that you could be earning in your investments, because it's going toward the financial advisor. But if you just work with a fee only, they're just going to charge you an hourly rate, or kind of just a flat fee to set up a financial plan with you. So really take that into consideration if you are going to look for a financial advisor. That being said, let's talk about what I would do since I've decided to invest on my own. I have this lump sum of money and I want to invest that on my own. So actually I'm going to decide, you know, how much do I really have? And you know, if that's a few $1,000s or maybe 10,000, 20,000, it could vary, right? But I have this, you know, large sum of money, not just a few $100s, but at least a few $1,000s. Then I'm going to take a look and see if I have a current 9-to-5 job, then I'm going to see if they offer a 401k plan match. So they're actually matching the money that I would be putting into the 401k. So I would actually max out the match that they would give, because that's, if you look at it right, it's kind of free money, because they're just matching whatever amount that you're putting in there. And usually it's up to a certain percentage. So I would just say invest that certain percentage up to the match and get that free money. And then if I don't want to take out the money within maybe 3 years, I want it to be longer than that, I would actually set up a Roth IRA with Vanguard. I like Vanguard. They're not paying me to say that. They have really good funds with really low fees. So that's where I have my Roth IRA set up, is with Vanguard, and I haven't had any problems with them. So that's where I would begin. I would set up a Roth IRA there at Vanguard, and then you can invest up to $6,000 if you're single. It's a little more if you're married. But I would just put my lump sum into my Roth IRA. And keep in mind that with a Roth IRA, you can actually take out the money that you have contributed without a penalty. And it's not the case with a traditional IRA. But with a Roth, you can take that money out. So if I had a better investment that has come up, then I essentially could take out that $6,000 that I have invested and put that toward another investment if I wanted to and not have any penalty. And with a Roth IRA, I've already paid taxes on that money, so I wouldn't have to worry about paying taxes. And then, I can only take out what I've contributed. So whatever money I've whatever money I've gained or made in that account, there would be a penalty if I was to take that out. But I kind of like that flexibility with a Roth IRA because I can take that money out before retirement age without any fee. So that's where I would start. I would put the money in there, and if I wanted to keep it super simple, just very, very easy, kind of hands off, and since I already know I'm not going to be needing that money within just a few years, within 3 to 5 years, then I would just put that all in a stock fund, and I would actually use the Vanguard Total Stock Market ETF. That has a really low expense ratio. And I have a video explaining the differences between mutual funds, index funds, and ETFs. So you can check that video out if you do have questions. But Vanguard actually lowered their expense ratio on their ETF, their Vanguard Total Stock Market ETF, to 0.03%. So that is super, super low. So I would actually just stick all of my money in that. And that ETF follows the total stock market, hence the name of the ETF. And that ticker symbol is a VTI. So that would just be a great way that's very simple to invest my money. And that just follows the total stock market. So I'm not worried about individual stocks, having to watch individual companies and pull stocks out or trade them, anything like that. I can just invest in that total stock market, and it follows that total stock market. So it's just tracking it essentially. As long as the companies are doing well, they're going to stay on the stock market. You can just put your money in that ETF and it will track the total stock market for you. So that's actually what I would do. And if I had extra money, I would also set up a brokerage account. And this just means it's a taxable account that you can pull your money out at any time. And then just pay the taxes on it. And if you actually keep it in there for at least a year, then you'll pay a lower amount in taxes. But you can take the money out whenever you wanted to. So you could set up a brokerage account and also invest in that ETF in your brokerage account to keep it very simple. I actually like having some individual stocks, so I have those in my brokerage account. But just to keep it simple, you could just invest in that ETF. And you can have as much money as you want in your brokerage account. There's no limit. There's not a $6,000 limit. And you can continue to add to your Roth IRA every year. And the ETF, the Vanguard Total Stock Market ETF, is around $150 right now per share. So depending on how much money you have, you could buy multiple shares of that ETF and just continue to buy that over time. So every time you have another $150, you could actually buy another share of the ETF and just continue to build that up over time and watch your investment account grow. So that's just a very simple way to invest your money. And actually, if you have heard of the FIRE community, the Financial Independence Retire Early community, that's what a lot of people are doing. They're investing in the Vanguard Total Stock Market, and a lot of them are actually doing the index fund. But since the ETF has that lower expense ratio than the index fund, I would actually invest in the ETF. And there's some capital gains tax. I'm not going to talk about it in this video because we're just keeping it simple. But there could be a little bit more tax that you would pay. But I feel like that would probably offset because you would have that lower expense ratio of the 0.03%. Hopefully that kind of gives you a really simple idea on how you can invest your money. And just to go back to using a financial advisor, they are going to charge you not only that fee, if you're using either a flat fee advisor, or if you are using one that takes a percentage of your money that you're going to invest. Their funds aren't always the best, so they usually have higher expense ratios. And you really want to watch that, because they even have what's called a load fee associated with some of their funds, which means you pay a fee up front when you buy the fund, or you could pay a fee when you sell that fund. And we don't want to be investing in those, because we want to keep as much money we want to keep as much of our own money as possible. So we want to keep our fees as low as possible so that we can grow as much money as possible over time. And you really want to watch that if you're working with an advisor, because I mean, ask them what the fees are, what the expense ratios are on each of these funds, what they want to put you in, and just see if any of them are close to 0.03%. And I'm willing to bet that they're not. So, if you guys have already tried this, comment below and share your experiences. I would love to know. But that's just something else to keep in mind if you're thinking about working with an advisor, because you actually, and if you're worried about getting good returns, you actually don't have to beat the financial advisor. You would just have to, come even with the financial advisor, minus whatever fee you're paying them and whatever those expense ratios that you would be paying as well. And if there's any commission fees, you would subtract all of that, and then you could at least be the same, if not more, to kind of beat the advisor, if you will, which I feel like is very simple, because a lot of their fees are super high, which is why I decided not to go with one anymore. So hopefully this helps and kind of gives you a better explanation on how you can really invest your money simply and still get great returns. Like I said, there's people in the FIRE community that have retired already, and they're in their 30s or 40s, and they've just invested in this one fund, and it's usually the index fund, which is essentially the same as the ETF that I'm talking about, that total stock market, Vanguard Total Stock Market Fund. And they've seen great results, and it's kind of nice just to be aware of your money. And it helps you, if you're taking care of your money, then you start to think, okay, well, maybe I need to change some of my expenses. Maybe I need to cut back in certain areas and really focus on spending money on things that I really value and increase my investments over time. So when you're in charge of that, you're really watching that and keeping an eye on it, and you can really improve that over time. But if you're kind of just handing it off to an advisor, it's kind of just like, oh, well, hands off, they're going to take care of it for me. I'm not going to worry about it, which really isn't the best attitude to have, because like I said, you're the one that cares the most about your money, and the advisor is just going, I shouldn't say all advisors, but a lot of advisors will just invest in what they think is best for them. So they make commissions off of, certain funds that they have you invested in. And if they can make more money, then a lot of them will make more money, and it may not be the best investment for you. So just keep that in mind. And you guys, if you found this video helpful, please like it and share it with someone else who needs to hear this information. And if you guys have other questions, or if there's other ideas that you have that you would like me to create content about, please put that in the comments below. I would love to create more videos for you guys. And please subscribe to my YouTube channel. Hit that subscribe button. That will really help me out. And if you guys are serious about fast tracking your financial freedom, click the link below this video in the description, and I can help you do that. And I will see you guys in the next video. Thanks.